Well, I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone gliding, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in the next week. And hopefully, lots of great ideas and opportunities for you throughout the show. Well, the stock market posted modest gains in the last week. His focus was really on lower interest rates and the likelihood that central banks around the world would be cutting rates again. Apparently, that's much more important than the strong indications that the worldwide economy is slowing in a significant way. In fact, there was really little that could break the market this week, as there were two tankers that were attacked in the Persian Gulf. In the past, just a whiff of that would have broken the market pretty significantly. And in this case, investors just, looked at the positive. And they chose to look at the fact that oil was moving up and oil stocks would then be better and move that up, and they bought the market instead. So just a very different environment that we're in right now. Both the CPI and PPI were weak, and we saw a very good Treasury auction this week with really strong demand for the 30-year. And it proves just simply that the U.S. Treasury yields are the best in the developed world and attracting a lot of money, and not even a sign of China weaponizing based on fighting the trade war. Just strong demand in that 30-year, and 2.6% yield in the 30 years attracting a lot of money. So 2.15% on the 10-year, you compare that to all of the underwater type yields that we have with a huge amount of debt around the world with negative yields. Well, the U.S. Is going to attract money with those kind of yields. Somewhere down the road, that is all going to change, and history will show that this is one of the more bizarre times that we have lived through, as we have just a very, very low interest rate structure everywhere around the world, and that isn't even bringing stimulus. Imagine what the danger was and damage was that was done back in the financial crisis that we're still living through right now. Even on Friday, bad earnings out of Broadcom, which posted very weak revenues and talked about the negative effect of the trade war going forward. And we're going to show that in the worst of the week, but the stock market hardly flinched. We're down here a little bit on Friday, but it's not really very much. There is little proof more that we need that the stock market has life than a market that reacts in this strong of a way. The Russell was the best index for the week, and that speculative fervor is picking up. And that sector of the market is very dependent on low rates because such a strong majority of them borrow a lot of money and actually don't make money. So we're starting to get that speculation, I think, coming in the indexes we see, as the Russell was one of the strongest of the week. One last little tidbit about the stock market condition that we're in right now. We look for the market to break into this May-June period, and it did so. And what happens when we do our kind of work is that we look for alignments in cyclical patterns. Our core work is cycle analysis. We have a very large number of individual stocks that are making cycle bottoms or have done that already at this time and moving into rally phases. When that happens, it's really an important indication that the market is in a better phase, and that's where we think we are right now, a period where the market will continue to rally and deny any of the negatives out there and be able to move forward, even to new highs. we'll call this a period of denial for investors right now, or the rally of denial, where for a few months investors will live on the hope of more central bank drugs coming in, lower rates, and a situation where government stimulates people to take on more debt, businesses to take on more debt, and companies to buy up their own stock, and all the financial engineering that lifts stocks. Well, we're likely to see more of that. But later in the year, there will be more companies, and maybe even sooner than that, like Broadcom, that come out and talk about the earnings difficulties that they're having, and comparisons are not going to be very good. And that period of denial that I think we're in right now will end with a big bad bear for the stock market. I get comments about that, people writing me about, oh, sure, we're going to get in a bear market. Well, there's so many people out there that have never really seen a bear market because we haven't had one for 10 years, and that is out there, and it's coming. But right now, we'll enjoy this high that we're in right now as the market moves up while we're here at this time. I can almost hear Elton John singing Rocket Man. You know, that's a movie that's out right now, and I actually just saw the movie. And if you're an Elton John fan and don't know what that means, Rocket Man, then you really should see the movie. It was good, and if you can hear him singing now, it's about being so high. Go watch it. Really good. And that's where the market is right now, on a high, but eventually it comes crashing down. Oop, I said the word crash. I'm not supposed to do that because people then say you said the market was going to crash. Well, I've been around here for 45 years trading. I've traded 3 or 4 crashes. I've traded 9 bulls and 9 bear markets. And I've seen this all, and right now we're in one of these periods where we're in kind of the last phase of a rally. And I think it's going to be a meaningful upside move that when it stops, it will be abrupt, and then it will be bad after that. Stocks for the week up about 0.5% to 1% based on the index that you're looking at. Bond market up about 2/3 of a point on the 30-year. 10-year yields about unchanged at around 2.09%. The 6-month and 10-year right now at about an 8 basis points inversion. And of course, an inversion means that the Fed has got short-term rates above what the longer-term rates are, which are more about the inflationary conditions. So we're in this inverted yield curve, which is terrible for banks. They can't make any real money, and that's more of the difficulty that we're going to see probably later on in the year. Gold up about $8.50 on the week, and it's strong even with the dollar getting a huge rebound today to the upside. So that's a bullish indication for gold, which we think is about to start to get into a choppier corrective period with probably an upward bias still. We've been bullish on it. There's no reason really to change significantly on that yet. Dollar up about 1% on the week, and that's probably on the fact that they've raised the GDP estimates here from for last quarter from 1.4% to 2.1%. And so the dollar like that today, but we don't think it's got much more to go. We'll show you that later on in the show. And the oil market down about 35 cents on the week. It's trying to hold a very important support level. And we're going to show you that also coming up in the best and worst stocks for the week, which is coming up very soon. Stick close because I've got so much to show you going forward. All right, for the best for the week, we're going to do what we always do. We're going to look at some important stocks. We're going to look at the 5 best and 5 worst, both on moves and what I think is opportunity. And I'm going to show you the first one, which was the biggest gainer of our 300 and something stock universe that we do analysis on, and that is AU. Take a look here at Anglo Gold. And this is a good picture of cycle analysis. We look at the rhythms of the market or the heartbeat of the market in multiple time frames, and then look at important peaks and important lows, areas of lows that are where we think are support or buy or sell zones, and then also give projections on the next cycle that we see. This cycle, Anglo Gold, this bottomed right in an important area, right around that 50% retracement level right there. You'll note the breakout above that important cycle peak resistance, and then it comes back close to that zone. And it was a little bit of a shift in here. In other words, the cycle's kind of bottoming a little bit late, but then we get in the rising zone that you can see here, and these are our target levels. So we had been bullish on the stock, we had been bullish on the sector, and you can see the stock moves up from 11 all the way up to 16. Just a beautiful move. That's almost a 50% gain, and we think there's more to come. Some resistance right over here at that fib extension line at around 1666, and then up here around over 18, potentially even higher to the top of that fib extension, about $20. So we think that there is more in here. We think there's more in the group, and this stock, a beautiful job. No news, it just basically favorable action that we have seen in this and in other stocks. I'm going to show you one more good gainer in gold stocks, and that's GOLD. The stock moves up also. Now, there's a lot to show you in here cyclically. I want you to see this important low that occurred right here, and you'll see the low on the cycle brackets. That rally right over here gives you a early breakdown, and it gets underneath this important low, and it sets up a decline, and that decline comes all the way through the next bottoming period right over here. So here was your bottoming period. It was a little late, much in line with the principle of variance. You can learn about all of that in our cycle analysis workshop at the askSlim site. And then we get into the next rally. It fails and then moves down. Now here's what's important. I want you to note that this set of cycles in here created a left shoulder and the left side of a head of the inverted head and shoulders. The next cycle gave you a bullish look going on right in here, and then we get into this rising phase. So there's two scenarios in here, but they're both bullish, and they both say that, you know, if you get into the support buy zone and move up, it's proving the quality of the next phase, and that's what happened in here as it begins to move up, just a little bit late, but now getting ready to complete this inverted head and shoulders. That says that were it to do that and get up above 14.5, it would then rally to around 19, which is the ideal measurement of the pattern. So this is just the beginning of this rally phase in here. So Barrick Gold, that's this one right here. We think having a nice gain on the week, and there is likely more to come in here in GOLD. So I wanted to show you those two gold stocks, Anglo and Barrick. They have beautiful patterns in here. They had nice gains on the week, and I think that there is more to come in there. Take a look at Decker, DECK. This stock has been just phenomenal. We've shown this so many times in the past and made comment to all of these bullish cycles. So when you see these green arrows on our analysis, it means that there are bullishly configured cycle patterns. Bullishly configured cycle patterns confirm that there is an upward directional force going on, and it actually is moving up the 34-week moving average very nicely, as you can see, and the uptrend is so clear in there. When this pattern in here configured bullishly and then bottomed, we thought it would move up again to the fib target zone, and it hits it exactly. This is a little early for a peak. We think it can go up still further. About 187 would be a reasonable target. About another 16 points on the upside. Been a beautiful looking stock, and until it starts to trace out a negative pattern, well, it will remain on our list of things that are bullish. A very nice look right there. So we talked about interest rates and the fact that they are very low and potentially going to stay low. And of course, that is help for the home builders as long as interest rates stay low and we don't get into a sharp economic recession or depression. Then the lower interest rates help the home builders. And Louisiana Pacific and Wire Weyerhaeuser, they're like home builder supply, building materials, and these are very good patterns when I look at this. Now again, I told you the importance of configuration. This is a positive configuration. You could see after this kind of neutral set of cycles, these are cycle harmonics, major cycle family right over here, bottoms here, bottoms here, bottoms here, and then moves up sharply. So you can see our target zone up here near 28, 29, right up there, as it follows the pattern very bullishly and very nicely. Bullish configuration, the base built, and we would look for higher prices in here. Analysts have upgraded the stock this week, and it gains 8% on the week. Did I tell you Decker's last one gained 9% on the week? So pretty strong gains. And Weyerhaeuser in the same group, building material. Look at this, beautiful patterns that we're looking at. Again, we have a configuration of a base being built in here and then likely to be moving up. Just look at the beauty of this as you have the double top right in here. This cycle peaked and this cycle peaked basically at the same spot. When you got underneath this key level, it warned you of the downside that would go to about this time frame. Look at that, just gorgeous. Now we're only 3 weeks or 2 weeks into this advance right over here in this positive upward trend that we've identified. The momentum is just now starting to give a sign of bottoming out in here and turning up. We think that this is going to be giving you a continued upward motion. 28.5 to near 30 is where our target is right now. And we think that you can buy this stock, given a little dip, that you're very, very likely to be moving up again. That is very, very good. I want to give a little bit of favorable mention. Now giving only 5 stocks that we look at in this category. And now I just want to add, instead of showing you the stocks, that we had looked for American Airlines to be moving up sharply and other airlines to be doing well during this time period. Well, they are really starting to move up, and they look great. So honorable mention or favorable mention to the airline group. We still think there is upside coming in there. That is the best of the week, and now we're going to show you some bad ones. Okay, for the worst of the week, we're going to look at another set of stocks, and we're going to start out by looking at stock that we'll say is a good representation of the oil drillers. Now, oil's been very weak, and I mentioned in the beginning of the show that I'll show you that in a short-term view, that there's a serious problem if it breaks below the last low. And we should be getting into a rally phase right now. So Transocean is a stock that analysts downgraded this week, and it helped extend this stock and the group to the downside again. We are looking for a rebound period in oil, and we're looking for a rebound period in these stocks, and we think it will be feeble, a minor upside advance, and that the timing is right for that to be occurring very soon. You can see in here the beautiful rhythms in there. That dashed line happens to be the OIH, and so this is running past that right there, and we think that there's a rally period going to come here. The question is, do you want to trade this stock for, maybe a 10-15% bounce? It's $5.40. Well, maybe better than that. It has a potential to get to around 7.25, but there's no sign of bottoming in here. Momentum moving down very, very sharply. Not a bit in sight at this point yet. With analysts downgrading it and the group moving down, we're just going to say we're looking for bounces in a very sick situation here. Sick. And the question is, do you want to play something like that? I don't know. This is not my style. I'm not buying this stock, and I'm not buying the group, even though I think there's potentials for bounces. I think it's in a very bad situation, as I think oil is. Overproduction, big inventories here in the U.S., big production every time it tries to pick its head up, and I think that these bounces in here are only going to be technical. Question is, do you want to play it? I don't know. 13% down on the week, and I'm looking for a bounce, and I'm not buying it. Here's the next one, and this one is, well, I'm feeling a little bad about this one. Why am I feeling bad? Well, I thought it was going to go down, and I'm short, or was short, Netflix. It's on my riskiest list for the year. and it's breaking down underneath these key levels right over here. I figured the market was going to bounce on the upside, so I covered my shorts, and I made money on it, and wow, I want my shorts back. So down, this stock moves down 7% on the week. More talk this week about competition. I can feel it in my gut that this one is going to move down. Yeah, I think we're in a positive period for the stock market, but not in this stock. It blew its opportunity when this rally phase right over here failed, gets up but barely above this last high. All these fib extensions up here were targets or areas of resistance, and it couldn't get there at all. Now it's broken below this key level right over here. That is a breakdown and points to a negative move. I'm going to use the center target right over here, just under 300. I think the market's bullish and going to go up, and I think at the same time Netflix is headed to 300. So this is a really bad pattern. I think it's going to get worse, and I'm just hoping for an uptick. I want my shorts back when I look at this, and I don't like the idea that I got out of them, and I wanted to take a profit. You know how that goes. Think the market's going to tick up, and I didn't think this one was going to break down, but there it goes. And this is a bad stock, and I think it's going much lower. Now, here's another disappointing stock I'm going to show you, and that is EA. That is Electronic Arts. This stock was one that was, in my opinion, setting up for a rally. But it is wasting its time and looks like it's going to break down. So you see this key level right over here around 89.50. That's that last low right over there. So if you look at the rally phase, this one comes right in here and then rallies and then breaks down. You see that early breakdown? And it fell then for over 2 months to this appropriate low period right over here. It then gives you this bullish cycle. Nice. It had rallied right up to that resistance. It hit our sell zone and then moved down, but then it hits the support zone here and then moves up, but fails. So this period right over here is looking like this period right over here. That's a problem. You see the engulfing here, how it made the high right there? Look what it's doing right over here. If it gets under that level, it is in trouble. I have people that have written me a number of times on this stock about the bullish setup and targets on the upside and all that. Well, we have now lowered this in here, and it looks to me like we're going to actually, once this breaks down, we're going to be projecting all the way down here to 75. So this is bad. It could save itself still by going straight up from here. That does happen. I think it's a low probability, and there's something very sick in here. It's really becoming a crappy-looking stock, and 7% down on the week, and I think there is more coming in there. I'm worried about it. The next one is AVGO. This is the old Broadcom, which used to be BRCM. It's hard for me to remember that. I call it now Avago, like everybody else does, but it's Broadcom. This is a worrisome pattern also. Now, this is a great example of looking at the harmonic families in analysis. Please do go to our cycle workshop on the site, askSlim site, and review. There's a free video on there. It'll tell you a lot about what we do and give you the whole table of contents. 20 videos that I think are just 2 years of production, of writing and production, and you will learn so much about this style of analysis. You can see in here each of these harmonic families. They're made up of this, in this case, 2 minor cycles and a dominant cycle. You can see that right in there. Beautiful. Bullish configuration, right? Brings you the big upside rally, and then a exceptionally large break. When you get that, you create these sell zones right in here. Based on our swing high, swing low analysis, you can then go watch those videos on how to do that in our in our tools for tech section, and look at here's the sell zone and comes down. Look how close it's getting to that cycle low support area. That is a very bad sign, and we believe that this stock has got problems. They believe it has problems. Their earnings were okay, revenue's big miss, they warn, on the trade war, and this is an early failure, and we think that you can sell upticks in this stock. And if it gets underneath that level right over there, well, let's just put this in here. I'm just going to duplicate that and put a line right there. If it gets underneath that line right around 250 and a quarter or so, well, it is in a lot of trouble. So we'll see if it can hold up or save itself. But I think you sell rallies in this one, and you can maintain a short bias when it ticks up. That is Broadcom, which is down 5% on the week. Now, Twitter is one that I think gives you opportunities in here. Twitter it's got this nice bullish pattern going on, and it pulled down into our buy zone that you can see right over here, and then began to move up. Now you can see this down week right over here. It was really a wild news week as they removed thousands of accounts related to, well, political issues or different countries or political groups, really purging some of that stuff. And that brought analyst downgrades as some analysts said valuations are high, but then other analysts came out and they defended it and said that their new ad model was going to help the stock. That's actually what I believe. And when you look at the bullish pattern right in here and it hits the buy zone and then moves up, the likelihood is still there that the stock is going to move back up. I am long Twitter and bought it actually yesterday, so I kind of sidestepped the decline, bought it while it was declining yesterday, and I think it's going to move up and get past this high over here about 41. So I could see a 5 to 7 point move on the upside during this bullish period right over here. Again, if it gets underneath that last low, that support, it will be over with. There will be no more bullish reason to be in the stock, and I would be out then under that condition. But it was a this is what I call an opportunity right now, where you're early in the cycle, it pulls down on some news, and then gives you an opportunity. It's not close enough to that low to really feel threatened, like I showed you in Broadcom or Electric Arts. It's a much, I think, a better pattern, and I'm going to call it a buying opportunity and a good opportunity for you or me, potentially, for another move to the upside this coming week. So that is a look at the best stocks of the week. I think there were some good opportunities in the 10 stocks that I just showed you. Don't forget those airlines. I think that they are still in very, very good shape. And in a moment, I'm going to bring you what I think is coming in the next week. All right, before I bring you my short-term projections for the next week, I want to make an important announcement to you. Of course, we at askSlim here, this whole team, and there's quite a number of us, we have great pride in continuously bringing all of our work to our community to support traders and investors. We have a proprietary blend of technical indicators that we bring you, and our analysis that you see in our cycle analysis every single week. And I've developed all of this over my 45 years trading. Yes, started on the CBOE in 1974, and I've been a trader, analyst, and coach, coaching countless traders over the years. Well, we're really excited right now to announce in the next month we're going to be bringing new products on and some enhancements to some of our other memberships. That includes a daily update for index traders, index swing traders and short-term traders. I think that you're going to find this daily information so valuable. We're going to bring so much information to you that you're going to be able to use to set your thoughts up for each trading day. And a really big enhancement now coming up for our level 3 members. That's really for option traders, swing traders, and even investor information in our level 3. Well, we're going to be updating our rankings grid, which brings you our rankings on 84 of the best traded stocks and ETFs and futures. In other words, it's the most widely held, the most active in options, and clearly the best stocks to trade, or ETFs or futures. What we have brought you in the past was our rankings, and we showed you our option bias indicator and short-term, intermediate-term, and longer-term rankings. And then you had to kind of sort through that and figure out what that all meant. Well, now we have written the algorithms to bring you the sum of the evidence, where we're going to actually show you what the directional bias is for that particular duration of trader in that swing trading, option trading category, that I think is going to be phenomenal. It's we're at the point now of getting ready to beta test that, and it's really the answer to the conditions of the market, and it will be an enormous help to you. Whereas you don't have to sort through the work anymore. We're essentially going to do that for you, and you're going to just absolutely love it, as you're going to be huge help with your directional decisions. That is coming up. We're going to be doing some beta testing. You're going to really be able to explore this and really help us. So that means you have to be an askSlim member. So please go to the askSlim site to membership. Look over those memberships. You're going to be wanting that daily data. You're going to find that in our level 2 coming up, and you want our rankings and there's some of the evidence work, which is just phenomenal. That would be level 3, and you'll also get that level 2 and level 1 information there also. So go look at that site. Please do sign up. You're going to love what's coming up. It's going to be absolutely a great help to you. That is the announcement, and we are just incredibly excited about that. Let me move my notes and get ready to show you my short-term view for the coming week. I always like to be accountable to what I said in the previous week. This was far from my best week, as even though a lot of my intermediate analysis was great. The shorter term analysis was not. I was only about 40% based on the way that I rank myself, which is on cycle patterns, support resistance levels, and whether I think the market is going to be up or down for the week, each of those individual markets. And I look at 5 of them, and I'm going to share those with you right now. So we're going to jump into the light crude market, and here I was only partially right on this market. Here is the our daily cycle analysis in here, and there was a bit of a shift that went on that you can see right there. We marked that off, where this major low right over here, which was expected, now moved out an entire minor cycle. That's about 2 weeks in length right there. And now even this one is threatening right over here. If this breaks this important low at 50.60, it's actually going to make this more correct. In other words, there was almost no rally in this period, and we're getting these continual downside moves. That would point to a low coming out at the bottom of this cycle, which is way out in late July. So this is a really dangerous pattern that light crude is in right now. We're looking for an up week. We thought last week that we would get an up week, but it's fighting this negative momentum. You can see that right there. That's the slim ribbon. It's the most phenomenal momentum indicator that I've ever experienced, and I get people writing me about that all the time, and it's giving you negative momentum right now. It's going to stop rallies from moving up very sharply outside of anything extraordinary. So we think that there's big trouble under 50.60 if it goes there, but we think it's going to hold up. So you can see this area of white space here. That's where we think this cycle comes up to. We were looking for to get up to about 55.60. We still think there's a shot for that in the next 5 to 8 trading sessions right in there. But if it holds up in here, it could come out over here that happens. But this is a big resistance area right over here. That's 55.60, 57.13, 58.83. Those are, that 57.60 to 58.80 is just a very rough area for it, and I just don't think it's going to get through. So we think it's going to test the resistance area, but all bets off if it gets under 50.60. So very important, this negative momentum. We're going to call it an up week, fighting against the negative momentum. We're looking for 55.60, but often the slim ribbon stops it. So it could be down to $54 that the slim ribbon is in the way, and that could be the best price that it sees. So we're going to watch that. We're going to see which of those resistances matter, and we're going to watch, of course, for a breakdown of that support. This is a very weak pattern that we're looking at in here, and as much as I think there's a rebound coming, I'm not trading this long, not under the conditions that I see here. I want to buy things that have positive momentum, that are retracing down. I don't want to buy things that have negative momentum like this that are struggling so much. It's just bad trading to do so. So a very weak pattern. We're going to look for a small up week in here. And then maybe even more trouble after that. So that's a look at the light crude market. Take a look at gold /GC right here. Take a look at these gorgeous harmonic families in here. I know it looks really messy to you, but I'll help you out. Here you can see this nesting area, silver making a low, the gold cycles making lows in here. Right in here, the same thing. That brought you that rally. This brought you this rally as we anticipated. And now what we see in here as it moved up to that, tickle that resistance area right there and gives you that really big shooting star. So that really looks like a peak that we can see right in here. Here's where supports are: 1332, 1328. And here's that 1662 resistance level right there. So we're looking at this range. We kind of think it's going to stay in that range right there. It could be that area of 13 right there. We'll just put that one in also. So that's your range essentially right there, and right over here. Just put those in so you can see it clearly. We'll make it 1328, 1362. That's kind of where we think we are. We still think the bias could bring it slightly to the upside, but with the dollar strengthening, you can see the effect in here as it tried to rally and it couldn't really get much further. I'll show you the dollar in a second. So it's a range bound in our opinion. We're going to call it only a small change on the week, and just be careful the stronger dollar causing this to get below that level, but we don't think it gets underneath the support. And you can see that we think here in a few weeks, 2.5 weeks, it comes down. If it gets into that buy zone, we think it's a buy. So that's why we have that there. So we'll call this range 1362. We don't think it'll get up there again. 1328 on the downside, and kind of consolidation period here for this next couple of weeks in the gold market. Next thing we will look at is the dollar, which got a surge today on the upside. Let me show you a close-up in here. This is what we expected. So we thought that the dollar would move to the upside, have a rebound. It's gotten a little bit stronger than what we expected. Top of the resistance right over here around 97.65. We do not think it will get above that. Note the downside momentum right in here. Gold, I didn't mention momentum, but that's still an upward momentum, so still positive. This is downside momentum. When it moves up against the downside momentum and gets you overbought in the projection oscillator down over here, the odds are pretty strong it's going to fail. So we think that it's going to be giving up ground in here, and we'll be moving to the downside again. There's our projection right in here. So this date over here, first week of July, July 5th, is where we think it will be moving down again. The question is, will this move up through here and then give a little different pattern? If that's the case, for those of you that follow our intermediate patterns, which we talk about on Wednesday on Future Speak, this might end up to be the weekly low, which would make this a positively configured cycle and then moving up again, and that would be a problem for gold. That will mean that gold would be more in a corrective period than what I'm showing right here. We're going to look for a failure at that 57.65 level and momentum dragging it to the downside again. We'll call for a down week in the dollar market. Now we're going to look at the bond market /ZB. And we'll just show you right in here the very, very nice upward momentum and beautiful cycles that have been bringing this up to a market that is lifting and rallying. And here's your positive momentum signal right over here. The bonds were at about 146.5. They rallied all the way up to 155, gave you that engulfing pattern, and now correcting. Now, I want you to see the nature of this correction that's going on right now. Remember, I talked about the strength in the bond market and the treasury market. And see this corrective period here? It's moving basically sideways within this flag pattern. That says that we're in for maybe continuous chop right in here that we're looking for, and then eventually moving up again. So I don't see a lot of short side in here, and this upward momentum still in place. I would still call this positive with the potential for a corrective week. We're going to look for a down week in here, relatively small, gets down to 152.22 or down to maybe 152.04. That's this support area right over here, but not giving up a lot more ground than that. There is just too big a demand in here for the treasuries, and we don't think that it's going to be able to give up a lot of ground. Corrective week that you could see right over here within probably this flag, and then the potential for a moving up again. So that is a look at the bond market. So the stock market, what we had looked for was a correction in the stock market, basically looking for a down week, testing supports, and it was not really able to give much ground in there at all. It didn't quite get down to support level and then started to move up again in modest way, and really has been just chopping the whole week when we look at this. So let's take a look here at the SPX that you can see right here. So this is we're looking at what we call another shifted cycle. So this you can see these minor cycles right in here, how it follows it nicely, the low right in here, the low right in here, and we were looking for this period right in here to bring a sharper decline. Even test this low before we realized this key bottom was made. Now what we're simply looking for is a modest pullback in here. It might only hit the slim ribbon right over here at around 28.60. It could get down over here to about 28.38. You can see we have updated that right over here in this message. We think that the lows in the June 17th to 21 period will then make a bottom and then be moving up again, as you can see right there. So that is what we're looking at, is a very bullish pattern overall. I'm hoping that this actually moves pretty sharply to the downside in here, because I want to buy here in this minor support area. But I have a feeling, we have this upward turn in momentum that you can see right there. When you get that, then the odds are less that you're going to get a big decline. That's why this slim ribbon coming up, the center of it being around 28.60, might be about the worst that we're going to see in there. So that is what we're looking for. We're just going to call it a small move to the downside and then moving up. I wouldn't be surprised to see net up on the week in some small way, or a small change as this momentum situation is improved, and I just don't think downside is going to come. If you can't break the market under the conditions that we've seen in here with interest rates really weak and the talk of slowing economies around the world, and then Broadcom coming out with horrible earnings, and the attacks on the tankers, all of those things which could easily have broken the market are not. If that doesn't give you some sign of relative strength, and I don't really know what will. It's a strong market, so we're going to look for a dip to buy in the stock market, and we don't think it's going to be much. Go to askSlim.com, become a member. It's important. You're going to get to all of this great stuff that we've been creating, and you'll be amazed at how much information that is and how much it's going to help you. I want you to be so careful. It is so crazy out there. We're always wishing you great trading.
Well, I'm going to the city and I'm going to do a steady show. And I know all my fans want to learn how to make some dough. I've been been cruising.